Hello, it is the 21st of June 2012. All of the images, the charts shown, available in the directory link in the more information box. What was a double bottom in gold is now looking like a double top. And it's not uncommon for a double bottom to turn into a double top or vice versa, double top turning into a double bottom, as is an inverted head and shoulders pattern turning into a head and shoulders pattern. It's very common to say the least, but it still has yet to approach the neckline of the most previous low set a few weeks ago. But the 1623, which was strong support, has now been strong resistance. And I've talked a lot about silver going to the 18 to 23-ish area, and it's pretty sure that if that was to occur, then that high 1300s, low 1400s in gold would also most likely be tested. Silver. Let's take a look at this longer term first. This was the hourly chart. Excuse me, the monthly chart. Way off on that one. And the big thing here has been the symmetrical triangle. Straight line here, roughly at around 26 in the third. Within this downtrend line as well, and the areas in which it's most likely to move to on a break of this support that is barely holding up right now is in this range between 18 to 23-ish or so. Moving on now to the weekly chart. And we had 6 straight weeks from the same closes, and what a weird pattern this was. However, falling from the 18 average of lows, back to the support level that's been tested quite so often. Even this is pretty much a test. I wouldn't be too strong at this level or even at 25. 25 may seem psychological, but I don't think that's a good position to be going long. However, if you don't care about movements to 22, 23, 21, you want to secure orders, by all means, you are playing within a correctionary phase. Let's move this on now to the, let's do daily chart. This is silver on the daily, and a pretty decent sized down move, 4 point whatever percent more down. Therefore, however trend line you want to draw this, and whether you want to use a straight line, whether you want to use a trend line, it's breaking it to the downside. And maybe this is the failed breakdown before the big move, and it's possible, but we already had this failed breakout, which for the last couple of weeks has been a warning sign that something like this could happen if it was unable to get above this 18 average of highs. The 18 average of lows, set at 2806, is one cent higher than today's high of 2805, thus making it the first time since back in here that the price action stayed below this level. And the last time the price action stayed above the 18 average of highs would take us back to the end of February. One thing to look out for now is resistance on any further moves up to about that 28 level, which I stated yesterday was a big level. And when we take a look at this on the hourly chart, it would be more convincing what that 28 meant. As what we see here is that it stayed and held below there for many hours last night, and it was resistance rather than that of support, and it's been support for quite some time. And then of course further downside action. Now as far as where this band is, I think it would be more apt to at least go down towards here, which tells me that this move is probably not over, maybe for today, maybe not. And thus, I would expect resistance to come if we have any significant stuff, maybe around 2730. Reason why is because I would expect this line to lower here, and if this line's going to make sense as key support, then this line's probably going to make sense for resistance, although maybe it might not, and later on it will. With that being said, it is in a bear market, and this is at the dangerous times where that 26 break could be pretty bad. And this is all priced in US dollars, and I want to bring up quickly the US bond yield. This is a long-term chart, each candle representing 6 months or a half a year. which means that it's at all-time lows right now. Percentage-wise, and this is not dollars, this is percent, just to let you know. It's just my computer automatically states what that it's in dollars. With that being said, the Greece one is the complete opposite. It's like 26%. Maybe the U.S. has a better bond system, but quite frankly, it's not looking too good. However, if there's a bond bubble, this thing should be going extremely high. However, quite frankly, it seems that people are enjoying our fiat debt-based system. After all, we as humans have choices in the actions and what we decide. And because we allow bankers, and well, pretty much bankers, to allow this Federal Reserve system to be in play, at least the vast majority, then a lot of this stuff can continue on. I don't know how long people can stay complacent for, but if it continues for a while, it could be bad news at the very end. I'm going to end this video at that, and thank you for